So, could a simple, honest mistake on your unemployment claim actually land you a third-degree felony? I know, it sounds totally extreme, right? But getting this reporting process wrong when filing for benefits in Florida can actually lead to some pretty devastating legal and financial consequences. We're talking severe penalties, massive overpayment notices, and in the absolute worst case scenarios, up to 5 years in prison. So, if you're navigating the system, absolute precision is literally your best defense.
Welcome to This Explainer. Today, we're going to carefully demystify the high-stakes world of Florida's Reemployment Assistance Program. Whether you are entirely new to the system or maybe you just picked up a side gig and aren't quite sure how to report it, we are going to break down the exact rules of the road. I'm really thrilled to guide you through this material so you can claim your benefits confidently, safely, and above all, accurately.
Here is our roadmap for today. 1. Florida reemployment basics. 2. Eligibility criteria. 3. How to report income. 4. Navigating special income. 5. Pitfalls and consequences. And 6. Resources and disclaimer. Let's get into it.
All right, Section 1, Florida Reemployment Basics.
So in Florida, unemployment benefits are officially called reemployment assistance, and they're administered by the Florida Department of Commerce. The big takeaway from our source material here is that this program is designed specifically as temporary wage replacement. It provides partial income to workers who've lost their jobs through absolutely no fault of their own. Going through a tough time between jobs can be incredibly stressful, I get it. And this program serves as an empowering financial bridge to help you cover basic living expenses while you transition back into the workforce. But here's the thing. Accurate reporting during this transition is absolutely crucial. It's not meant to replace your full salary, and the whole system is built to heavily encourage getting back to full-time work as quickly as possible.
Moving right along to Section 2, Eligibility Criteria.
To actually qualify, you've got to meet some pretty strict requirements. First up, you must have lost your job through no fault of your own, which basically means you didn't quit without good cause or get fired for malicious misconduct. Second, you must have earned at least $3,400 before taxes during what they call your base period. That's generally the first 4 of the last 5 completed calendar quarters. But here is where the ongoing effort really comes in. You have to be physically able to work, available to work, and, this is key, actively seeking employment. Florida law mandates systematic and sustained efforts to find a job. For most claimants, this means you are legally required to contact at least 5 prospective employers every single week that you claim benefits. Oh, and you absolutely must keep detailed records of all those contacts.
Okay, Section 3, How to Report Income.
Florida manages claims through their Connect online portal, which is often accessed via the Reconnect system. To even get in, you have to pass strict identity verification using a third-party service called ID.me, complete with multi-factor authentication. And once you're inside, you can't just click a button and get paid. New claimants have to complete a work registration process on the Employee Florida system and take an initial skills review, which is basically a career assessment evaluating your math and reading skills. If you skip these administrative hurdles, your benefits are going to stall out completely. Once you're actually cleared, you have to submit weekly certifications. The portal will give you a scheduled reporting date, and you have a very strict 7-day window to log in and report. When you do, if you worked at all, you've got to provide comprehensive data, exact employer names, physical addresses, start and end dates, and, critically, the employer's Federal Employer Identification Number, or FIN. The state uses that exact number to cross-reference tax records, so it has to be right.
Next up, Section 4, Navigating Special Income.
Under Florida law, you have to report almost all forms of remuneration. If you pick up part-time shifts, do some freelance work, or take gig jobs through an app like Indeed Flex, you must report that income. Severance pay, tips, commissions, and bonuses, those are all reportable too. Conversely, some income is actually exempt. For example, a massive relief for many older workers is that regular Social Security retirement benefits do not count against your unemployment. Neither do workers' compensation payments or things like employer-provided meals. Now, let's talk about managing your finances while unemployed. If you take on part-time work to stretch your budget, knowing your boundaries is vital. In Florida, only the first $58 you earn each week is disregarded. Any gross earnings above that $58 threshold are deducted dollar for dollar from your weekly benefits. To manage your finances safely, a good tip is to budget around your base unemployment payout and use part-time work strictly as a supplementary buffer up to that $58 mark to maximize your total income in cash. This strategy lets you keep your skills sharp and bring in a little extra money safely without unexpectedly sabotaging your core benefits.
Which brings us to Section 5, Pitfalls and Consequences. The absolute most crucial point is this. You must always report your gross pay, not your net pay.
Gross pay is the total compensation you earned before federal income taxes, Social Security, Medicare, or retirement deductions are withheld. So many people look at their bank account, see the net take-home pay that was deposited, and mistakenly report that smaller number. Do not do this. The state considers this underreporting, and trust me, it will get flagged in their automated auditing databases. Our second major pitfall is the actual timing of your reporting. You must report earnings for the specific Sunday through Saturday week the work was actually performed. It doesn't matter when the paycheck arrives. If you work a shift on a Wednesday, but your employer doesn't pay you until 2 weeks later, you still have to report those earnings for the week of that Wednesday. Reporting money when it hits your bank account rather than when the hours were worked is just a fast track to an overpayment notice.
And if you get these reporting rules wrong, the consequences are genuinely severe. According to the Samus law firm, which defends these exact cases in Florida, reemployment assistance fraud is defined as making false statements or failing to disclose a material fact knowingly made for the purpose of obtaining benefits. While legal intent does matter, if you consistently underreport your gross wages or you just fail to report your side gig work, the state may very well investigate you for intentional fraud.
If the state issues a fraud determination against you, you are going to be required to repay the entire amount of the overpayment, plus a really harsh 15% financial penalty. You'll also be completely disqualified from receiving future benefits for up to a year, and if it goes beyond a simple administrative penalty, the state attorney's office can actually prosecute this as a third-degree felony, punishable by up to 5 years in Florida State Prison. Remember, just knowing these rules is your absolute best armor, so take your time when reporting.
Finally, Section 6, Resources and Disclaimer.
Look, if you are ever confused about how to report a specific type of income, please reach out to the official channels. Don't guess. You can call the Reemployment Assistance Customer Service Center at 833-352-7759. You can also use the online contact form at floridajobs.org. And if you need in-person assistance, CareerSource Florida centers are located all throughout the state. They can even help you use the Employ Florida database to meet those weekly job search requirements we talked about safely and effectively.
Now, just a quick disclaimer. This explainer is strictly for informational and educational purposes. Keep in mind that legislation and reporting portals can and do evolve. You should always consult a qualified legal professional or contact the Florida Department of Commerce directly for personalized advice regarding your specific claim. I want to leave you with this final provocative thought. Are your personal employment records actually accurate enough to withstand a state audit? The next time you log into Connect, just take an extra 5 minutes. Double-check your gross wages, verify the exact dates you worked, and make sure your employer contacts are perfectly logged. A little meticulous record-keeping today protects your finances and your freedom tomorrow. You've absolutely got this. Thanks so much for joining me for this explainer, and good luck with your career transition.